Hello, my name is Cynthia Lopez, and my Group 13 members also include Shauna Abbott and Daniel Silverman. And this is our Trak Investment Challenge presentation. Trak is an online market game that teaches students how to invest in the stock market. It simulates stock investment portfolios such as those held with Vanguard and E-Trade. At the beginning of the semester, each team in our class received $100,000 to invest in any stock we felt convenient. We then had to set goals and decide on a strategy to invest our money, and this is how we did it and the results. At the start of the competition, our group had agreed to take the conservative path when taking on the Trak Investment Challenge. Our plan was to do extensive research and only invest in those stocks with returns higher than 5%. At first, we were scared of the possible negative outcomes of investing, so we only bought a few shares of each stock. However, towards the end of the competition, we took more aggressive decisions. We decided to invest more money in stocks that we were already holding because they were showing good returns. And we also increased the number of shares bought for the new stocks. We believed that buying more shares would increase the return on our portfolio. Tesla Motors is a company that designs, develops, manufactures, and sells electric vehicles and electric vehicle powertrain components. They currently operate 42 stores in the US and Canada, and their goal is to mass produce fully electric cars at a price that is affordable to average consumers. We purchased 10 shares of this stock in the second week of the competition at a price of $179.65 per share. And as we noticed that the price of the stock was increasing, we decided to buy 30 more shares of the stock, but this time at a price of $182.11 per share, in hopes of an even greater return. Unfortunately, our actual return on this stock was a negative 3.85%. Acadia Healthcare provides behavioral health treatment facilities for children, teenagers, and adults. They specialize in helping patients with mental health disorders and alcohol and drug addiction. They currently operate 51 health facilities in the U.S. and Puerto Rico. In week 6 of the competition, we purchased 10 shares of this stock at a price of $39.01 per share. Our expected return on this stock was 3.21%, but our actual return was only 0.12%. This was not a good investment. Tenet Healthcare owns and operates 41 acute care hospitals providing secondary healthcare services to patients. They also operate 90 outpatient centers in the U.S. Some of the services provided by Tenet Healthcare include radiology, intensive care, physical therapy, and surgical services. Although this investment was risky, we purchased 100 shares of the stock at a price of $46.32 per share. This was in the 6th week of the competition where our strategy had become more aggressive. We had expected a 9.85% return on our investment, but at the end of the competition, our return resulted in a negative 0.65%. Trina Solar Limited manufactures solar power modules that are sold worldwide. These modules provide electric power for residential, commercial, industrial, and other applications. Trina Solar is the 3rd largest solar module company in China and the 4th largest solar panel company in the world. They sell their products in Europe, Canada, and South America. In week 8 of the Trak competition, we bought 100 shares of this stock at $15.63 per share. In researching the stock, we found that the risk on the investment was only 22% and that the stock had been steadily growing. For this stock, we had expected a 4.79% return, but in the 3 short weeks that we held the stock, we only received a 0.14% return.
Nike is an American-made company manufacturing in sporting goods, apparel, and accessories. They became very popular with their branding of the Just Do It logo, which increased their awareness and profits. We purchased the stock at $67.92. The expected return was 7.19%. The actual return was 0.33%. This stock was a good return on investment. The price of the stock was very steadily increasing throughout the competition. By the end of the competition, the return on Nike stock was 15%. Unfortunately, this stock was one of the first stocks we purchased and only invested in 14 shares. Colgate-Palmolive Company is an American-made company specializing in the production of oral hygiene products. The corporation operates in 2 major divisions, that being personal care and Animal Nutrition. Their animal products brand their name under Hill's Science Diet. We purchased the stock at $59.45. The expected return was 4.36%. The actual return was 0.19%. This was a good investment because by the end of the competition, the return on the stock was 10%. AutoNation is one of the largest automobile retailers in the United States. The corporations operate in 3 segments: domestic cars, imports, and premium. Research showed that this stock has been on the rise over the last couple of years. We purchased 200 shares, and by the first week, we were a negative 0.9% return on investment, and for the remaining 3 weeks, the returns continued to decline. We purchased the stock at $49.45. The expected return was 5.94%. The actual return was negative 0.03%. Twitter is an online social network. Its platform also provides video and mobile applications. The company just went public at the end of 2013, so there was no history to compare. We purchased the stock at $43.50. The actual return was 1.22%. We purchased only 470 shares of the stock, and unfortunately we didn't have much time to ride out the gain. This chart shows our portfolio return. Our strategy was to hold on to our stock until the end of the trading period. With our expected return based on the stock's beta and performance of the market, we were sure we would get a positive return. Unfortunately, our return was negative. We started the competition with $100,000 and purchased $45,755 worth of stocks. At the end of selling all of our positions and receiving interest, we received back $44,544. Our ending portfolio return was negative 1.21%. What we learned and how we could have done things differently. Diversify is key. We should have purchased more stock in smaller quantities with decent expected returns. Less time is less money. We should have spent more time researching for new stocks to purchase to get a better return on investment. Crisis can create a negative impact on the stock market. Be in tune with the economy and unplanned disasters for a downside slope in the market. References.